Good morning, everyone. Good afternoon, whatever part of the world you're at. It's going to be a different time zone, right? Anyways, thank you so much for being here. My name is Juan Grimaldo with the Grimaldo Group at Keller Williams, and I have my buddy here,
Raul Hernandez with the Grimaldo Group at Keller Williams.
and we have a special guest today, right, Raul?
Oh yeah,
Who's that?
we have the very famous Lauren Fisco, Lone Whisperer.
I am a lone whisperer.
About yourself, Lauren.
Hi, everybody. Thank you for having me on. Appreciate it.
Sweet. So I wanted to chat about a couple of things. We had the topic as how to get your offer accepted, but I think we're going to go on a little tangent here because I think it's important for consumers to understand the times we're living in and to know that it's not that bad, right? I mean, I think the rates went up to 4% and we're freaking out. We're so scared that they're so high. Lauren, I'm going to put you on the spot here, but do you remember what the rates were in 1980?
I believe they were I could pull it up. Actually, I have the graphic of it, but I think they were around 14 to 16, something like that. We are still, this is historically low. It's crazy.
Exactly. So 14 to 16%, right?
Yes. Yes.
Were people buying homes back then?
Absolutely. There's always people buying homes because it goes up, it goes down, but real estate is how you build wealth. So it's getting in is the key.
Right. So, and I mentioned this often, probably people are bored of hearing it, but I ask people, when is the best time to plant a tree? It's 20 years ago, right? It's a Chinese proverb. And the next best time is today, right?
Yeah.
And we're involved in this so much that we actually just purchased a home with my kids. My kids bought a house. They're 18 and 19 years old. So I'm super stoked about that, right? We believe in it. We're actually closing on our new home at the end of the month. And I'm not bragging. I'm just saying we live this. We don't just tell you to buy a house because we want to make a commission. That's the last thing we want to do. We want to help you build wealth. And I think Lauren just made it very clear. This is the path to wealth, right?
Yeah, absolutely.
Sorry. Personally, I have been telling all my clients, hey, this needs to be your new family business. If you're living in Arizona, you guys have a family business or you have your jobs, yeah, take care of them. But at the same time, team up, acquire.
Yep. Buy and hold. People like to flip. I don't. I like to buy, hold, and then have other people pay my mortgages. I'll take advantage of the tax breaks and everything. And, the appreciation and the depreciation, right? So the one thing I wanted to talk about, Lauren, is, which I think is very important, is for those people that are waiting to purchase because they want the market to crash or they're hoping for the market to crash. By the way, I've heard somebody very prominent say that hope is not a strategy, right? So what is your advice as a loan officer? What would you recommend to that first-time home buyer that it's sitting on the sidelines for the last year to 2 years to 3 years and say, you know what, I want to wait for the market to crash. I want to wait for the situation to get better to buy a home.
Oh, that's, how much time do you have? I could go on and on and on, but I'll try to make it short. So in my opinion, there will not be a crash. There is no crash ahead. Couple of reasons. When we had the crash, the reason was people could buy houses. The joke is if you could fog a mirror, you could buy a house.
Yep.
In other words, you didn't need anything but a pulse really to buy a house. You didn't need down payment. You didn't have to show income. You'd nothing. And today the underwriting is it's not impossible, but it's much more precise. So yes, you have to go through qualifying to buy a home. That's number one. Number two, the issue then was that there was too much inventory. There were gazillions of houses and not enough people buying them. Today, it's the flip. Gazillions of people, not enough inventory. That just drives prices way higher. So my advice to someone would be get in now. And the reason is when rates are going up and appreciation is going up, which, by the way, I think I just read a statistic this morning. It's 18 or 23%, somewhere in there, depending on the source that you're looking at, but it's a lot. So rates are going to go up as well as appreciation, right? You can always refinance your mortgage because it will come back down, but the price of the house will not come back down. So it's going to continually go up. And we are headed for a recession. If you look back in history, every single recession, excuse me, is followed by a lowering in rates and an increase in housing. So just a little bit of data. So, you know, fear drives markets, but really you want to know math doesn't lie, stats don't lie. So that would be what I would nutshell say. I could go on, but I won't. I cannot hear you.
Sorry, I had muted myself. So
Sure.
you mentioned something that I think is pretty powerful, and it's fear, right? So there's another prominent man named Warren Buffett, if you guys know who that is. He said, when people are afraid, be greedy. And when people are greedy, be afraid. So what happens is most people get afraid and they jump out of the market and they sell thinking that they're going to do great. I'm going to tell you guys the story, and I believe I told it before. One of my clients wanted to sell his house about 3.5 years ago, because he was going to wait to buy a property cheaper because the market was going to crash. I sold his house. You remember, I think you met the guy too. So I sold his house. I begged him not to sell it, but he was going to do it anyway. So listed his home, sold it for like $175,000. He bought that home for $90,000, right? His payment was super low. His payment at that point, even if he would have kept it at that point and bought it or refinanced it, was going to be super low. Long story short, he's still renting up to this point, and he cannot purchase a home anymore. He's priced out of the market, and he's paying about $1,800 a month in rent. So we bring this to you guys. We don't, of course, we are in business. This is what we do. This is what we live by. But we're not doing it just for the money. We really, truly want to help you guys out, get into a better situation, which is owning your own home, right? And if you're renting, you can attest to this. Your rental price is huge compared to buying, even though the rates went up. And we're going to have Lauren talk about a little deeper into this conversation about that. You're still better off if you purchase a home than if you rent, correct?
Absolutely. For sure. Yeah. The real estate is a wealth building tool. So mortgages should never be a big old debt pit. It should be a way to leverage wealth, really. So even if, for example, I have clients that'll buy their first house and then a year later buy another primary and use the original as a rental income property, use the rental income as income to qualify for the next house. And that's how you start to build your wealth. In this market, I've been even speaking to clients, my own kids too. Buy something, even if you don't absolutely love it, it's better than renting from someone else, because you could sell it and you're still going to make money in a year or 2 years. So rather than, and I get it, the inventory is low and it takes effort and time to go look at houses and go fight multiple offers, but you get the right team, you'll be okay.
Amen. So one of the things you mentioned is the multiple offers, right? We deal with that quite often. And I was also sharing, I have a lot of stories. So about 2011, we short sold our home. We were part of those statistics. We bought a house in 2004. We rented it out. We moved in 2006 to a nicer house or bigger house. And come 2011, we lost everything, right? So in 2011, we short sold our home and we bought a little house. I told my wife, I'm not going to rent. I'm a realtor, first of all, right? I'm not going to go and rent the house. And how honorable is that? So I believe in ownership. So we bought a house for $65,000 at a 10% interest rate, 2011, right? That's a huge, people say, oh, that's a lot of freaking interest. That rate is crazy. I was paying $500 a month. So for me, it was comfortable. There was 3 empty homes on one side and another 2 empty homes on the other side. And I was so happy to show up to my neighborhood every day to see if there was a new neighbor, because back then, you've been doing this long enough, you probably saw this, and it was just depressing, right? But it was bad. So I went by my house for $65,000. Wasn't the nicest neighborhood. It wasn't the home of my dreams. It was nothing like what I wanted. The only thing I didn't want is pay rent. Fast forward 2 years later, we bought a home for, we sold our home for $112,000. So it doubled in price. What did I do? Just pay my mortgage. That's it. Rents back then were $800, $700. I did a lot of rentals. That's how I started my business. So then again, I can go on the story, but every single time I was doing what you were saying: buy a bigger home, make the other one rental, keep going. And then fast forward, we own several rental properties, and we always preach to our clients about that, right? Take money out of your house, invest it.
Fair warning. It's like when you tell people, right, or you show somebody a trick. Don't try this at home. Don't think that 2008 is going to happen again anytime soon. So those are like super great examples. I have a great example myself in my home, but I don't even like telling people that because they want to wait for that to happen to them, and it's not going to happen that way. But the curve is set. The trajectory of the appreciation is set. So whatever happens, I should go this way. Whatever happens to those values, it's still going to go back to that trajectory.
Yep.
Right, Lauren?
And that's important to
yeah.
You went back in 2006, properties were going up like this, and then they dropped so low. If you take that line that Raul was talking about, you're basically where you should be at with normal appreciation, which is 3 to 4% to 5%, right, Lauren?
Absolutely, but that's not what we're at now. So we're more around 18 to 23. So yes, all these world factors, COVID, Ukraine, inflation, we have to have inflation, otherwise things get out of control, and it's going to have a correction, and that's when rates will fall, and that's probably, I don't know, year and a half from now. But let's say,
sorry, just real quick, wherever you're at, people, wherever you're at in the market, if you're considering to wait, eliminate that from your hopes and dreams. That's not going to happen. Second of all, just grab a chip. You want to have a chip, no matter what happens up and down or whatever. You want to have it's a placeholder. Like Juan said, don't look at how am I going to buy that thing? It's not worth $400,000. You know, in your mind, logically, emotionally, it doesn't make sense.
Yep.
But as the professionals are telling you,
it's the facts, and we don't focus on emotion because we take that away. And like Lauren was saying, I mean, inflation is going to happen. And where do people put their money when inflation happens, Lauren? What do they do?
They real estate. They put.
Go ahead. I'm sorry.
Well, yeah, in real estate. So one of the things to make it, I like to simplify things, and I always want to know why. So one of the things, if you look at it, and I think I sent you guys something like a infographic, but let's say, for example, I'm just going to use easy numbers, $400,000 house, and you actually have to go and offer 410 or 420. You're going to make that back in about 2 to 3 months, is a guess. I actually have a tool I can show the bid over ask of what the how many months will it take to recoup that cost. But what will happen is you're now in, and 9 months later, that house is going to be worth, I'd say, $475. So if you waited the 9 months, now instead of 410, you're at 475. And if you look at, I think there's a different one or somewhere in there to show the payment difference of what was going on in November of last year. I'm going to try another one. That's a buy versus rent. There's one. There you go. Bingo. So this shows what happened, what the rates were in November of last year, where they were in January, where they are now, and where they're headed. You can see if you scroll down just a little bit, the same house. Now you're factoring in, I think I had 4% appreciation in there. That plus a rate increase. You're looking at $700 difference in payment if you wait until July. That's not very far from now. And this is based on stats of where the market's projected. So
exactly.
And again, even that the rates are a little higher, mark my words, they're coming down in a year to a year and a half. So great. But you're now in your, go ahead.
But you don't want to wait for those rates to go down.
No.
The loss of opportunity of the appreciation that you would have missed out on far surpasses any savings that you would gain by getting a lower rate.
For sure. So here's the easy way to think about it. from November to January, it was a $200 difference. Yes? Ish.
Yes.
Let's just say it's an ish. All right. So $200 times 3 months, or let's make it easy. 10 months. It's $2,000.
Yep.
All right. Let's say rates drop in 10 months, which they might. They probably will, give or take. So
Right.
that's $2,000 more that you spent because you bought now, instead of $50,000 more that you waited and bought a house later on.
Boom.
That's
So
the difference.
just to put people to think and understand how massive this is. If you bought a house last year, and I can bring you several clients that went and bought a new build with us. With us, remember that word. They bought a new build with us. They have $100,000 appreciation just moving into their home. They didn't do anything. They didn't even made a mortgage payment. And yes, are they going to pay more because the rates went up? Yeah. Who cares? They made $100,000 more in 1 year. And this year, like Lauren was saying, they're projecting up to 30% appreciation.
Right.
Why? There's a lot of investors, guys, and there's a lot of you don't know, but there's several hedge funds, several institutional buyers. Institutional buyers, for those who don't know what it is, these are investors that have a ton of money. They have billions of dollars. They don't have millions, they have billions. And they're buying property left and right, outbidding the regular consumer. I can attest to this. I have listings and they come up and say, Juan, we want that house. I said, dude, I have 10 offers offering above asking. What's the highest? And I have permission from my clients. I ask for permission. They allow me to share the price and they pay above that. Why are they doing that? Why is Blackstone? Whoever knows Blackstone, you know who Blackstone is, right, Lauren?
Yes.
Okay? They're very powerful, probably the most important investor in the world. They're buying properties here in the Valley and all over the country because they're protecting their money from inflation. When inflation happens, property values go up. So if you're waiting for the market to crash because of the inflation, that's not going to happen. I'm sure the milk and the gas you buy is not cheaper, right? That's inflation. And the cost of goods is going to be more. It's going to cost you more. If you have money in the bank every single day that goes by, because those goods are higher in price, your money just keeps getting cheaper and cheaper. So $1 is not going to buy you the same thing today as they're going to buy you the next day.
Right. And then at some point that will turn around and go into recession, and then it will flip. And that's how it goes. It ebbs and flows. So get in on the beginning of the rise so that you can take advantage as it goes down.
And people think that this is the peak. And you're mentioning the beginning of the ride. We're not there yet, guys.
No.
This is just the beginning, because these prices today, again, Lauren, you've been doing this long enough. In 2005, we're pretty much around there, maybe a little higher. But these are 15-year-old prices, 16-year-old prices. So when you see the prices and the rates, go back to 1980, go back to 2000, go back to 2005. 2005 and 6, what was a good rate back then, Lauren?
Oh, I can't remember. You put me on the spot. I can't remember. What, 10?
It was about 7%. I had an 8 and a 10% because I had a first and second mortgage. But for all of those that think that this is bad, a great rate, if you had a 800 credit score and 20% down, 8%, 7%. So again, if you want to wait for the perfect scenario, this is it.
The other thing I just want to throw out there is that there was an increase in the conventional and FHA loan limits. And I'm sure you guys know, maybe your viewers don't. They don't do that unless values are going up. I mean, there's no way the FHA would say, hey, we're going to raise our loan limit if we think values are going to go down. There's no way. So FHA is now 441 to 600, and conventional is 647 200. So those are increased from last year because appreciation is going sky high. So another validating factor. Yeah.
The law of supply and demand. A lot of people, they hear it and it's very common knowledge, supposedly, right? And also gravity. Gravity is common knowledge too, right? I mean, that's a law, right? Okay, so same thing applies. Like the only thing that can affect prices is how many people want the thing and how many things there are.
Yep.
That's it. Right, Lauren? Am I right? Or is there something else?
No, that's it. You know, at least for me and the clients that I work with, the predominant feeling that I see is it's a lot. They're either it's too much work. There's so many people wanting these houses. It's too much work. And I think the difference really is realtors like you and the team that, you know, we kind of create around our clients to, you know, I'll call a listing agent. If you're making an offer, I'm going to call the listing agent and explain how qualified your client is and how quickly we can get this done and how, you know, all the things that we do to keep our, we have an average clear to close of 11.3 days, just saying.
That's insane. That's awesome.
Right? So we work really hard to, you know, keep everybody updated and move your file quickly. There's sometimes where you want, you know, there might be a post-possession where, you know, the sellers don't want to move out yet. Cool, we can do that too. So as long as we are behind you, then we can help you get it even despite all the multiple offers. So I think a lot of people are just, it's like, you know, house fatigue. They don't want to go look at more houses, or they just give up before they try. And I would say, don't give up. Get in.
We got some really cool stories about our clients. Raul, actually, when he first came on board, I had a rent. We bought a property with my brother as an investment, and we put it up for rent. A guy calls us up and said, I want to rent the property. I'm like, do you really want to pay my mortgage? You want to buy your, you know, home? He's like, I've been looking for over a month and we haven't had any success. I says, give us a shot. And Raul took him out and Jaramillo and went under contract the same weekend. So it makes a big difference when you have the right team. Obviously, we want to have a great lender behind us, because if you have a great lender, we can then go fight together and the battle is very smooth. So we're taking down quite a bit of other offers, and again, just got to have the right team. It's like going to court, right? Are you going to take a good lawyer or a cheap one?
Right.
And that's the thing. If you remotely have a desire in your heart somehow of being an owner versus renting, which I'm hitting like 90% of you people, because there's some people that are like, I don't ever want to own nothing. And okay, well, that's a different person. I'm not talking to that person. I'm talking to the person that has a remote interest in purchasing one day. You find yourself around Juan Grimaldo's in the world and Lauren Fisco's in the world. They will make all
and Raul Hernandez in the
and
world.
Raul Hernandez is in the world. We'll make all those vague dreams possible because we put the pieces together for you. Lauren loves puzzles. Juan loves the action. I love seeing people's hearts, you know, getting melted because they just opened up their door. And we all love that.
Yep.
And we're here for you.
And one thing that I want to mention, guys, that is very important is, and you, Lauren, can help me with this if I'm, or let me know if I'm mistaken. It used to be that if you made $60,000-$70,000, that was a great income for a great property to qualify for. Mm-hmm. What is the minimum right now to qualify for a home?
Oh, that's a difficult question. I'm
going to share with you. I was at a training with Tina Tamber for the market update. I'm a geek with this stuff, so I need to know what's going on. So basically, right now, for anyone to purchase a home, the average for what the average in Phoenix is about $90,000. So if you by yourself make $90,000 a year, you're fine. But it's scary because again, 40 to 60,000 was our average. I think right now it's about 50 some and change, the average income here, which it makes it really difficult for people to qualify. So again, we've been talking about this for years now. We've been talking about affordability, and it's getting to that point where it's going to be very difficult for everybody to qualify.
So I want to speak to that from a lender perspective, because that might be from I know Tina, she's great. She's every week always on point. From a lending perspective, that is a really hard question because I need to know, in order for me to create the strategy, I need to know all the puzzle pieces.
Yep.
So you could make, 60, and I have clients that do and if they don't have any debt, buying power goes up.
That's the key.
Yeah. So, do they have a VA benefit? I can't tell you how many people I speak to that are vets, and they don't even know what their VA benefit is. They have no idea. So that's another one. FHA and VA, a little more flexible on ratios. So I like to work with clients. If I could get my hands on any client 6 months to a year before they're even going out looking, that's what I want, because I can set them up with a roadmap on how to get there. We can clean up their credit. I don't do that, but I mean, I've seen enough where we know how to, reduce the debt and liabilities and increase the buying power. And it's better all the way around.
So this is, and again, you get another great point, which is before you do anything, is I tell my clients, they're like, well, I want to buy a house and I make so much. I'm like, well, it's like a doctor, you can tell a doctor, hey doctor, can you guess what I have? Well, what are your symptoms? Well, I want to show you. Can I draw some blood? No. How about an x-ray? Oh, then how the hell am I going to get you a freaking answer? I need some information. So the best thing to do, and Lauren, I appreciate that, because that goes to show you the type of professional you are, and how you can help people get there. It's not like you come to us and we say, oh, you know what, you don't qualify. Sorry. We say, okay, what can we do to help you get there? What options do we have? And when I was doing loans, it was the same thing. That's why I loved it, because you get to be creative and you get to put the pieces together to say, okay, how much you make? What are your debts? What can we do? How can we help you? How can we increase your credit score? And that's what matters. I mean, we're not here to just take your money. We're here to help you get to that point, and we want to get you to the finish line, no matter what your situation is. And again, another story is when I bought my first house, I was the worst nightmare for a lender. Low income, job hopping, bad credit score. So everything you can imagine I had going against me. So for a year, in 2004, I knocked on every single door that I could find. Nobody helped me. And after the year, I run into this guy who took the time and put the pieces together and actually ended up working with him. That's how I got into this business. And now I know how it feels to be on the other side. For that reason, for me, I'm not here just to make money. I'm here to help people reach their goal, because I know how it feels to be in that part or in that position. And I take this to heart, because some people say, you know what, I'm not going to touch those clients. I'm not going to deal with them. And I said, you know what, thank you for letting me know, because I don't want to work with you either. So we do a service to the community, and I want to continue to do that. We're blessed with work, and yet no matter what, I'm going to continue to do it.
Yeah.
Sorry. My last before you could. I love your input, Lauren. I want them to know also. Don't try to. You can back me up on this if I'm right. Don't try to DIY your credit. Don't try to DIY your situation.
Yeah.
Like, I'll talk to I've had people, they paid $10,000 in debt or $20,000 in debt on their own, thinking that that's going to better their credit, when they could have done two things different, added maybe a little more, added a card to their system or whatever. They added two credit lines, done the same thing in the scores. Like, talk to us, talk to the professional, talk to Lauren.
It makes sense. It sounds logical what you're trying to do when you fix your credit, yet the credit system does not think the same way. There's different modules, there's different forms. Go ahead, Lauren.
I want to give just one piece of advice to anybody that's grappling with any kind of credit stuff. And it's so cool, because there's a lot of, Dave Ramsey people, which I think is kind of cool. I disagree with him on the mortgage piece. The debt piece, I think is I don't, anyway. So what I see a lot of is people will have credit cards, and they've gotten into trouble with credit cards. It's easy to do. And then they finally, woohoo, they pay them off, and then they close them. Don't do that. So if you have credit cards and you can pay them down, you want the balances below 30%, below 10 is better. But what you want to do, here's a little hack, super easy. Everybody's got some kind of static bill, whether it's a Netflix account, a cell phone, Google storage, Spotify, those bills that are reoccurring every month. All the cards that you get down to zero, do not turn them off. That's part of your credit score. Put one static bill like Spotify on this card, auto pay from your bank. Never think about the card again. You can cut the card, but it never gets turned off, because that credit history is super, super important. So if you finally get your credit back to where you want it to be, and you turn that card off, you lose all the effort that you just worked so hard to get that balance down. That's part of it. The other part is the history. So there's my little Wednesday life hack.
Awesome.
Just easy one.
Awesome, guys. Well, yes, we appreciate you coming, Lauren, to our
Sure.
show, and we're going to invite you once again. We love having these conversations. So, again, we just want to create that space where you guys are able to ask questions and let us know what you guys want to hear about. And I mean, we're here to, we know most people are afraid of sharing what knowledge they have. I feel like the more you learn, the more you earn. And if you're open to learning, I mean, we're here to help you guys and provide you with information. And also, if you're not buying a home, if you're thinking the market's going to crash and the world's going to end, we can sell your home too. I mean, we need properties. There's very little inventory. We're here to help.
Yeah. Thank you so much for having me join. That was fun.
Thank you for joining us. Appreciate you.
Last thought real quick. Those people who have all that equity and they don't know what to do with it, we can help you.
Yep. We can show you ways to invest. We've done it. And if you want to get a free book, just type your name in the chat. Text me your phone number, or there's my phone number. You can go text me and I'll gift you guys a book. It's called The Millionaire Real Estate Investor. I started investing before I read it. I found that you're thinking about putting your money to work. Your houses can have babies, like Raul was saying. That what I do is say, as soon as they have equity, refinance, pull it out, buy another house, and then that one goes up, and the tenants are paying for your mortgages. And before you know, you're gonna have a bunch of properties that are, gonna help you with your retirement and subsidize it too.
And your babies can have houses that have babies.
Yep, and then you can be in for me, it's Cancun, just enjoying the beach, having fun, and then coming back to work. So I like this too. I love it. Awesome, guys. Thank you so much, Lauren. Anything else?
Anything else, Lauren, before we go?
No, I'm just grateful. Thank you.
Thank you. Take care.
All right, guys.
Take
Give us a
care.
call, leave your comments. Follow us for next week's live at 12. We'll see who's on.
Yes. Thanks, guys.
Bye-bye.